Welcome to Accounting Paper November 2021. Today we'll be covering question 2, share capital, financial indicators and cash flow statement, which is 35 marks for 25 minutes. The information relates to Brewer Limited to the financial year ended 28 February 2021. The first question requires us to prepare the ordinary share capital note on 28 February 2021. So let's have a look at the information. So shares and dividends. At the start of the year, we had 800,000 shares in issue. At 30th June, issued 100,000 new shares. And then 1st January 2021, you bought 30,000 shares at 1 rand, 2 rand more than the average share price. So as soon as you hear about share repurchases in your information, always remember that up until the average share price, the deduction will be a credit to ordinary share capital. Anything in excess of that value will directly go into retained earnings. And then 28 February, there's a question mark on the number of shares issued. Then we have interim dividends of 162,000 paid on 30th September. And then a final dividend of 22 cents per share were declared. Note, it was not paid. We have extract of statement comprehensive income. We have the extract of statement of financial position with the petty cash and cash flow being missing. Another thing that you must draw your attention to is SARS income tax was a credit balance or liability last year and a debit balance or asset this year. Okay, so let's get started. So to prepare the ordinary share capital note, you can see there's a template which kind of gives you an indication if you really can't remember. So we had 800,000 shares in issue at the start of the year. And all you need to go is get your ordinary share capital balance at the start of the year, which is 645,000. Then there was an issue of 100,000 shares. We don't know the rand value, okay? So I'm just going to continue the information because I don't have anything very clear that tells me what's the value. Then on 1st January 2021, we bought back 30,000 shares. So I'm going to put here negative 30,000. And immediately we can do the calculation for the closing balance, which will be 870,000 shares. And we have the closing balance or new share capital. So most likely the new share issues will be the balancing figure. So here we're going to say shares repurchased at, now we don't know the value. What we do know is it was bought at 1 rand 20 extra. Now that doesn't matter for the ordinary share capital, no, because here we're not splitting between retained earnings and ordinary share capital accounts like when we do a general ledger account. Okay, so it doesn't matter from that perspective. However, what you do need to do is strip out the ordinary share capital account amount because we are only doing the ordinary share capital note. So we're not going to worry about the retained earnings part. So I'm just going to bring up my calculator. So I'm taking 6,450,000 divided by 800,000. Okay. And what am I trying to do? Well, I'm trying to calculate what is the average price. Now, the problem with using the opening balance to calculate your average price, usually what you do to calculate your average price, you would take the 800,000 and the 645,000 rand, and then the 100,000 and then whatever rand value it is. You would add the rand values and then divide it by the number of shares in issue just before the share repurchase, which would be the 900,000. But the issue in this example is we actually need to work a different way to calculate the average share price because we don't have the new shares issued rand value. So the only way you can do is you can't just use opening balance because remember, you need to use all transactions just before the share repurchase. So the safest way to use is taking the closing balance of 7,395,000 divided by 870,000 to give you an average share price of 8.50 per share. And then you say, okay, that is the average share price, which we do deduct from ordinary share capital. Anything that was paid above that, we know it was, just go back, 120, that will affect retained earnings. So what if we punch that in the calculator, then you should get 250,000. And then all you need to do is work backwards to get your balancing figure for new shares in issue of 125,000. Okay, so the key thing here was to know that the new shares issued was a balancing figure, and then to calculate the average share price using the closing balance and closing number of shares, because you couldn't just use the ordinary share capital at the start of the year. Okay, let's have a look at the next question. Calculate the following financial indicators. Okay, now I love this question over the alternative, which is comment. Find comment, you need to think a bit more. Calculations, you know the formulas, go ahead and calculate. So let's go to information. We're doing operating expenses percentage of sales. And you can see from extract B, we can get the information. So you don't need to go put down the formulas. You can go straight to the working. So it's 1,458,600, which is operating expenses, divided by sales of 7,293,000. And then you say multiply by 100. Because it's a percentage, make sure your answer is in percentages. So 20%. The next one's dividend per share. This is total dividends, whether it was declared or paid. We're not focusing on that. We are focusing just on the declared part and then divided by the number of shares. So we know interim dividends was 162,000. So in the top numerator, you're going to say 162,000 plus final dividend was 22 cents per share. I'm going to convert that to rands, 0.22, and multiply by the number of shares in issue at year end, because it was declared on 28 Feb. And that's 870,000 shares from our previous calculation. And then we divide the total numerator by the number of shares in issue. And your answer, please make it in cents. So it's 40 cents per share. Dividends per share and earnings per share are usually given in cents. Okay. Percentage return on average shareholders' equity. So if you look here, the numerator will be net profit after tax of 985,500 divided by average shareholders' equity. So that's basically, if you go to your balance sheet, it's your opening plus closing balance divided by 2. So it'll be 645,000 plus 8,038,100. Just check again. Okay. Divided by 2. That's your denominator. And then you're going to multiply that by 100 because it's a percentage. And you should get 13.6%. Now, one thing I want to draw your attention to is please follow the initial instructions. If you go right to the top, it says, where applicable, 0.6, show all calculations to 1 decimal point. Okay. Now, the crux of the question for 18 marks is to complete the cash flow statement for the year ended 28 February 2021. Now, what's nice is we have some balances here. Okay, so before I start on any of the sections, I want to have a look and see where can I get easy marks. And generally, okay, so we know cash flow from investing section is sorted. We don't have to do that. We have to do operating and financing. And then we need our opening and closing balance for cash equivalents. So I'm going to check if we have that. So we have a bank overdraft. You need to be careful on that. And you have a petty cash. So you have your opening balances. So what's going to happen for your opening balances? And I'm going to put the calculation here. You're going to take your positive cash and cash equivalents balance of 20,000 and you're going to subtract from it for your overdraft. So always keep an eye out for an overdraft. And that will be a negative number of 75,200. Okay, now, well, closing balance we can't calculate because petty cash and cash float, we don't know the balance. But we do know that the overdraft is 0, so we don't have to subtract anything. It's most likely going to be our balancing figure. So let's do, because we worked on financing, let's do the ones that we did. So we know from our question that we issued shares of 1.25 mil. And that's a inflow. Then we know we repurchase shares. Now be careful on this. The 850 only relates to the portion that was recognized in the ordinary share capital account. Remember, if we go back to the question, it says that 30,000 shares repurchased at 1 Rand 20 more than the average share price. So you're going to have to add 1 Rand 20 because here we're not focused on retained earnings or ordinary share capital. We're just focusing on purely on cash flow. Then you're going to multiply that to 30,000 shares that we repurchased. And it's an outflow of 291,000. Now we've done the share part. The only other financing activities can be loans. So you can see that your loan balance decreased from 2.2 million to 1.65. So you can see loan repaid, $2.2 minus 165. So that's an outflow of 550,000. Then don't forget to total your financing activities to give you 409,000. So we're done with financing. Quick marks because we took most of our answers from the previous question, but just share repurchase. Remember, it's total cash flow. Then we've done got investing. So now we're going to focus on cash flow from operating activities. Now here you'll see there's cash generated from operations and interest paid that's grayed out. What they're telling you here by graying out is you don't have to stress about those two numbers. We're not going to calculate those two numbers. You don't need to calculate those two numbers. And why is because you have the total from your cash flow from operating activities of 1.18 mil. So you just need to fill in the gaps. Okay. Now the easiest one, because just sticking on the previous question, would be dividends paid. 162,000. Remember, the final dividend was only declared. Now, if you think about any other line items, so let's look at our balance sheet. Our balance sheet, if you look carefully, you have a SARS income tax. Okay. So, taxation paid. How would you calculate that? You would start with your opening balance, which is 35,900 plus taxation expense. Now here it's the difference between net profit after tax and net profit before tax. So it's 135 more minus profit after tax of 985 500. So that's adding your taxation expense. Now, usually you would subtract your opening balance if it was a liability. But because it's a debtor's balance, you're going to add 29,100. You punch that in a calculator. Okay, and you can see there's the block is complete. There's no more items. That's just a completeness check. I like to check we finished all the lines. Now, we can calculate the net change, which will be your operating activities amount minus your investing plus your financing activities to get your movement, which works out to be 269,000. And to that, you subtract your opening balance. So basically, you'll say 269,000 minus 75,200, which will give you a closing balance of 1,938,000. Thank you.